From the land, the Grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It is the 13th day of January, 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Curt Kimmel. He's at agmarket.net out of Normal, Illinois. We'll hear from Andy Lee, a native of Urbana, Illinois, who now lives and works near Los Angeles. He had written a commentary of sorts on LinkedIn that I saw because of some of the listeners that follow us there. I asked if he would voice that for us. We'll hear from Andy in just a bit. And then, as we close out our time together, we'll talk more about Friday's USDA reports. We'll do that with Frayne Olson from North Dakota State University Extension. And we'll hear about the agricultural weather forecast, too, with Mark Russo from EverStream Analytics on this Monday edition of the Closing Market Report, celebrating 40 years on the air, some 10,000 episodes, and more than 30,000 interviews.
Todd Gleason's services are made available to WILL by University of Illinois Extension.
March corn for the day at $4.76.5, up 6 cents. The May futures at $4.86 3/4, 7 1/4 higher. And December new crop up 7 at $4.57 1/4 on this Monday. The March futures at $10.53. In the soybeans, 27 3/4 higher. May at $10.66.5 a bushel, up 28.5. And the November contract up 20 cents at $10.51. Bean meal at $3.0780, up $9.50. The bean oil 41 cents higher at $45.99. Wheat futures soft red for the day, a gain of 14 1/4 cents in the March at $5.45, and the hard red at $5.61, up 9 1/4 cents. Live cattle futures $1.37.5 lower at $197.40. Feeders at $267.90, up a buck, or rather down $1.50. And lean hogs were up 62.5 cents. There's that green number at $83.17.5. We're now joined by Curt Kimmel. He's at agmarket.net to discuss the marketplace. Hi, Curt. Thanks much for being with us. I think some might have been surprised that there was as much follow-through today after Friday's USDA report showing some fairly friendly, maybe even some people calling them bullish numbers. What were your thoughts?
Yeah, it's nice to have some positive reaction for a change in here and actually see some follow-through. The magnitude of this price rally caught the ag market team kind of off guard. We were kind of looking at not such a bullish report, and the market kind of following the trend like we did a year ago and 10 years ago, where we established a high here the first part of January. Of course, we're still in the first part of January. It depends what day you're counting in through here, but this is a welcomed rally. Basically, when you look at the big picture here, a 1.5 billion bushel corn carryout is quite friendly, especially if you go back to where we were when the supply-demand balance sheet started coming out. The trade was looking for 2.3 billion bushel carryout. And if you go back and pick any month you want to choose for prices, March corn was trading $5 back then. And here we are at 1.5, and we're quite a bit below the $5 benchmark still. So still a little bit undervalued if you want to use that for a comparison. But also, too, fundamentally, when you look at the U.S. numbers coupled with the world supply demand balance sheet, world supplies are quite tight, too, or tighter than what they've been accustomed to. And that kind of also filtered into the wheat side of the equation here. So there's been some urgency to get some ownership on. Of course, the commodity funds were the ones today to kind of add a little salt to the wound here if you're wanting the market to go down. Funds bought 12,200 contracts of beans, 9,400 contracts of corn, 4,200 contracts of wheat, 2,900 contracts of bean oil, 5,900 contracts of soybean meal going into midday there. So they got the green light on. Today is day 2. Will we get day 3 tomorrow, or will we see a turnaround Tuesday?
Yeah, so day 3 is the day when the funds are buying. That's usually the day that we either continue and make a much larger move, am I right, or we peter out at that point.
Yeah, if you go back and history's not always the same, but 3 days is about as much as you get. Lately, it's been about 2.5 days in it, and they're usually to where they want to be on it. Now, when you look at the momentum indicators, RSI, we're incredibly over bought in through here. Actually, today, if you look at the particularly on corn, it's a little bit more evident. Is March was up 6. The May up 7, the July up 8. What I'm getting at, this is first time we've really seen the bear spread kick in. And the significance of that is we've seen just a huge amount of country movement. Producers have taken advantage of this price move here to get caught up moving some cash grain, Todd, particularly for the nice weather we're seeing here.
On the soybean side, was there a surprise in the exports this morning?
We did. China bought 198,000 tons U.S. soybeans. The trade kind of assumed they were fairly well done. So that is welcomed business here. We'll see if that continues here. So shipments are good, exports are good. We're hanging in there, and that sale, coupled with a little bit of dry weather in Argentina, helped add a little fuel to the fire here. The forecasters are kind of flopping around on that South American forecast. That forecast is going to change every 6 hours, but that'll be the next thing here we kind of watch as we move forward here is that South American forecast. One other observation for those keeping track, last time we did visit, we were looking at the soybean chart. And at that particular time, we were looking at maybe the market would dip down here and try to carve out a right shoulder on a head and shoulders bottom. And luckily it held with the help of the crop report on Friday here. It broke some neckline, some trend lines in through here. So that was the other thing, technical-wise, to help add a little bit momentum to the buying interest here the last 2 days, Todd.
I know it doesn't mean a lot because it's in expiration, but there was a 3-cent gap higher, too, on the technicals in the January contract this morning.
I think that's going to continue to add some volatility to the marketplace here. Is volatility increasing through here, you got to take advantage of some ups. This is an excellent opportunity if you want to hang on to some cash grain or have not been aggressive or getting started on new crop 25 to come in with some price floors in here, kind of protect your bottom line. Particularly next month, we'll be looking at the crop insurance prices. We'll be taking the average price of February, and that's very critical because just about everybody uses crop insurance programs, so it's going to be important to make sure we keep corn above 4.5 and try to get these November beans above 10.5 this new crop year.
Thank you much.
You bet. Take care.
You too. That's Curt Kimmel. He is with agmarket.net. You know, the tragedy unfolding in Los Angeles is awful, and it touches many lives. Here on the Closing Market Report, we've already talked with the folks at the Los Angeles Regional Food Bank. We did that Friday. You can hear it in the Closing Market Report podcast. Check out the podcast links at willag.org. And we've connected those Santa Ana winds with the changing climate, as well as what could become a potential drought in the Corn Belt this season. And today, we'll hear from somebody who's been impacted directly, an Urbana native now living in the Los Angeles area with family that was in the path of the fires. Andy Lee also happens to be an alumnus of the University of Illinois. He wrote a quick commentary on LinkedIn that some of our followers commented on and that I saw. So I asked Andy if he would voice that commentary.
Hey, my name is Andy Lee, and I'm originally from Urbana, Illinois. This week, the Los Angeles wildfires hit close to home, literally and emotionally. My wife grew up in Los Angeles, so this tragedy hit hard. As the fires raged dangerously close to her childhood home, we feared for the safety of family and friends. Her parents immigrated from Shanghai in the 1990s and were hesitant to leave the house that symbolized decades of hard work and memories. Despite evacuation orders, my mother-in-law couldn't bear the thought of losing it all. They experienced paralysis in the moment, despite our pleas to leave. When we heard that the fires were just miles away, my wife and I raced up the 405. determined to extract them. Ash fell across our windshield as we dragged them to safety. Seeing my mother-in-law trembling, clutching her hot tea with shaking hands, brought the reality of the tragedy into sharp focus. Here's what inspired me most. Even amidst the chaos, my wife turned her energy towards helping others. She rallied the family to gather food, water, and supplies for those who lost everything. Together, we delivered essentials to the local YMCA, where we witnessed an outpouring of generosity from the LA community. It was a powerful reminder, even in moments of crisis, people come together. To those impacted by the fires, our hearts are with you. This chapter will pass, and together, we'll rebuild this incredible city. To everyone watching from afar, thank you for your thoughts, prayers, and support. Tragedy tests us, but it also unites us. We will overcome. Watching my wife rise to the occasion reminded me of one thing. I definitely married up.
Andy Lee is originally from here in Urbana, Illinois, and now lives in California near Los Angeles. He and his wife extracted his mother-in-law from the path of the wildfires that had been raging across that county. North Dakota State University Extension agricultural economist Frayne Olson, located on campus in Fargo, now joins us to discuss last Friday's USDA reports. Hi, Frayne. Thanks for being with us. I'd ask you if there were any real changes, but obviously that's the case. Can you start with what you think were the most important numbers, please?
Well, okay, so the one that everybody is really focusing on is a reduction of production for corn as well as for soybeans. We had a trimming of acreage, planted and harvested acreage for corn. We took some yield off of the corn. Just tweaks and minor adjustments on the soybean side, but a pretty significant reduction in the soybean yields as well. So the market responded positively from a price standpoint to the lower production. I think, I guess the comments and questions I'm been getting most of is, usually this January report, we don't get those shocks. We don't get those big adjustments. Periodically we do, admittedly, so where did USDA miss it? How did this happen? Given that most of the traders and analysts and forecasters are looking at relatively minor adjustments. And I guess from my perspective, as I take a look backwards, and again, I haven't had a chance to study every number in those reports because there was several hundred pages of material that came out. But it seems as though most of the reductions in corn and soybean yields, as well as a little bit of the acreage, came in those what I call the transition states. The core states, the core corn belt states. Iowa, Illinois. We spend a lot of time focusing on those because they are such large numbers. But as you radiate out of that, as you get into the Dakotas, as you get into further into the East Coast, you get into the Ohio's and even Kentucky's of the world, they're still important states. Individually, they don't add up to as big an acreage and production as obviously as the Illinois and Iowa's do. So it seems as though most of the adjustments, most of those changes that we saw were from those transition areas. The other thing I just want to remind everybody, we haven't had a production update since the November report. So the November 8th report was the last time we had formal production updates from USDA. Most of that data, most of the analysis came in the late part of October. And yes, we were making good harvest progress, but we were only partway through the harvest season. And so, there was a little bit of a blind spot. And I think some of those last harvested acres, some of the tail end crop and some of those areas that were, as I said, in this transition, turned out to be a bit lower in yields than we were expecting. And that's where, by the time everything added up, that's where the reductions came. So now the question is, moving forward, what does that look like? The market absorbs this information pretty quickly. We did see a nice rally price-wise on Friday. It looks today like we're have some follow-through price improvement. The big question, okay, at what point do we stabilize? And then moving forward, again, markets chew up information very, very quickly. In our crystal ball, what are the next things we need to be looking at? So My perspective is we were, from a pricing standpoint, given some opportunities here. I hope that farmers are taking advantage of that to try and get some old crop sales cleaned up. I do think these are going to be some opportunities. I am a bit concerned as we move forward. When we think about the new administration coming in and potential for additional tariffs and retaliations and what all this political instability that we're looking at in the agricultural world right now is, I think, going to add a lot of anxiety and some concern into the marketplace.
I have a question related to the corn rally prior to the USDA report Friday. If you listen to the analyst on Iowa Public TV's Market to Market over the weekend, you will have heard them say that the market was telling us something was going to change in the Friday reports and that it had already built it in, or part of it, and in the process that they likely had purchased enough to cover their needs in the near term. And their expectation is that basis might break.
I guess in general, I agree with that analysis, because what was leading, especially for corn, the strength in the corn was some pretty strong export demand. And even as prices were rising, we continue to have those export sales. Well, with this pop or this reset kind of in expectations, I guess my underlying question to everybody would be, well, is that export demand going to continue? At what price do U.S. prices get high enough in the global market that people start looking someplace else? And so then what does that mean for product flows, which is really the basis level, is the flow of grain. It's your local market trying to regulate the flow of grain is one simple way of thinking about it. So as prices go up, we start getting some additional sales. As those additional sales hit the local marketplace, we tend to see a softening of the basis, unless it's driven by a big increase in the demand side. And so again, I sit back and start thinking about this and saying, well, what is the response from the buyers going to be? As farmers and farm managers, we see this opportunity to start selling more aggressively. And typically what happens then is, buyers start questioning, well, at what point is this a value proposition again? And I tend to look to the international markets as that reference point, because they tend to be the most price sensitive.
So what are the international markets saying about corn and soybean?
On the soybean side, we're now getting into that transition zone between the global marketplace coming to the United States versus starting their slow shift into the Brazilian market. The Brazilians have started their harvest, especially in Mato Grosso, but it's very, very early in the stages. There's only a few acres being taken off. We really haven't gotten into that heat of the harvest season yet. That will be coming in the next couple of weeks. And so I guess the other part to this will be, is that transition from the U.S. markets into the Brazilian market, is that going to be accelerated, or will that be just a normal transition that we've seen kind of over the last several years? In my opinion, because some of the rains and some of the weather forecasts, I think that transition will probably go a little bit slower than what some are forecasting or some are projecting, just because of the availability of product.
Thank you much, Frayne. Frayne Olson is with North Dakota State University Extension, serves as an agricultural economist. Now let's turn our attention to the weather forecast. Mark Russo is here. He's with EverStream Analytics. There at the end of our conversation with Frayne, we were discussing, of course, the international marketplace, particularly Argentina and Brazil. What do the crops look like in Argentina today? And whether, really what we want to know is, will they get rainfall?
Yeah, well, where they stand today, at least based on the latest data from the Buenos Aires Grain Exchange, you currently have for corn over 90% in good to excellent and fair conditions. That has started to drop, though. It's a similar situation for soybeans too, but the item of note is that those conditions have started to drop over the past couple of weeks due to the drier pattern that began to become established in around the Christmas holiday, and then heat that has built into the region. So while conditions have deteriorated, they're still above the 5-year average, but the question becomes, will this trend continue, or do things start to be, do they halt here with better weather? coming up. So kind of turning right to the forecast here, is there any sign of significant relief to help turn things around or even stabilize things? It doesn't look like that situation here coming up. It's not a totally dry pattern, but from now through the end of the month, it is a drier bias pattern. There's two rain events coming up, but they look minor in nature. One coming up here later on this week looks to produce about 35% coverage. So, a few scattered areas get some stabilization, but still a majority of acreage here will miss out here. And along with this will be a continued warmer temperature bias, and so things we feel in the net will trend downhill further the next week or two.
And are things different in Brazil?
Yeah, things are different in Brazil in the fact that most areas have adequate soil moisture. Granted, southern Brazil has also trended drier here of late. However, that area looks to get significant rainfall, even starting by the end of this week. Places such as Rio Grande do Sul and Paraná will get back into a normal, even slightly wetter than normal pattern. So, improving soil moisture there. And up north and center west, a continuation of generally normal to above normal rainfall.
Here in the United States, sometimes, and I don't know whether this is the case, when California is really hot and dry, and you can talk about the Santa Ana winds maybe for tomorrow Wednesday in this process as well, that spills to the north and then kind of opens a floodgate, pushing cold air down across the Rockies and into particularly the Dakotas. Can we expect more of that, and is that what's really taking place?
Yeah, we're seeing ridging of high pressure across the western portion of North America, extending from California all the way northward into Alaska. And actually coming up late this week and over the weekend, this Alaska ridge will be significant. And as a result, downstream, that is going to force a very strong Arctic air mass into the middle of the country. It's not record setting in that for January, but it is going to produce basically the coldest temperatures of the winter here in the central U.S. for a couple of days, basically, the first half of next week.
And the Santa Ana winds over the next 2 days?
Yeah, what we're seeing here is an increase in winds and then lowering of humidities, basically from today through midday on Wednesday. So a high risk of more wildfire initiation here overall, as well as a spreading as well. So not quite as extreme as a week ago, but nonetheless poor conditions here with the setup the next few days before conditions calm later in the week.
Thank you much. I appreciate it.
You're welcome, Todd.
That's Mark Russo. He is with EverStream Analytics, joined us on this Tuesday edition of the Closing Market Report that came to you from Illinois Public Media. It's public radio online on demand anytime you'd like to listen to us at willag.org, willag.org, or search us out in your favorite podcast applications. Just look for the Closing Market Report. I'm Extension's Todd Gleason.